All right, what's going on, boys? How you doing? Tonka, Andrew, Ginger, Ricky, Gurvinder, how you guys doing? A good way to start the week. Monday, we were warned a lot. I mean, me, Bookie, Ricky, we kept warning this market has a lot of macro issues going on right now. Be very careful going long farther out, adding equity, etc., leaps, whatever. I know it was very tempting and it seemed like it, but that's exactly what a bear market rally is supposed to do. It's supposed to screw with the minds of the bears, and it's supposed to get bulls super long so they can screw them later. Because the market loves screwing the most people over as possible. You can go over and argue with anyone you want about whether this is healthy consolidation after such a rip or whether this is just a sign that we're going right back down. For me, if it was healthy, we had to hold this 50-day moving average. We did not hold the 50-day moving average. We closed below it. We have the CPI numbers tomorrow. What's up, other Andrew? How you doing? And for right now, I don't consider this a very healthy pullback. I mean, we've given back a lot of the move. It's still less than 50%, which is bullish, but we've closed under all the moving averages. The daily MACD is starting to get ugly here. As you guys see, we crossed bearish on the MACD. That should never have happened if this was a healthy pullback. There's a couple other warning signs, plus all the macro stuff that's going on. There's the VIX that's near 20. So again, like I've said in the group many times, this is a different type of VIX. Basically, since COVID, when you get to around 20 or near 20, you want to start taking off your longs. So take profits on the longs. You want to get long around VIX when it's at 40. When VIX is around 40, I want to get long stuff. When VIX is around 20, I want to get short stuff. That's as simple as I can put it. And right now we had the run. If you guys got long there in March, you've seen the type of run that you had in the market right here. And now the VIX is back near 20, so I'm not too confident going long at all. There's a couple long plays that I do like I took some Twitter today for May. If you guys seen the flow that was coming into Twitter, there was millions and millions of dollars coming into $50 and $55 calls for May for Twitter, so I jumped in some of those. Other than that, I'm not too long at all. Even in my equity account, I have some Zim. I have a couple of names that I like longer term that pay dividends. But other than that, this market's going to come a lot lower in my opinion. And this is just the beginning. But let's see. Overall, I mean, SPY, again, we had that huge run up from March. That just means there was too many people short here. When too many people are on one side of the boat, they tip the boat on the other side, and all those shorts got squeezed. First day, maybe they didn't cover. Second day, maybe some of them covered. Third day, more covering, and then people kept buying puts on the way up here as well. So that just adds fuel to the fire. Yeah, I'll go over NVIDIA. If you guys got the newsletter, literally every single play on the newsletter hit. All the semiconductors were weak as expected. Disney HD were strong in the morning. We hit calls on the Disney. I'll go over in a bit. Other than that, QQQ, I mean, look at this gap down. This is not a healthy chart, guys. If this was a healthy run up here, we would have consolidated maybe to the 21-day moving average here around 353-ish. Not even like 355, 354. But QQQ is all the way down at 340, guys. Like we were just talking about 372 like last week, and now we're already at 340 just like that. So all the bulls, you know, they disappear from the group chats, the ones that called out the long plays, and let's see what happens now. I mean, there's no guarantee we go down further. There's no guarantee we don't go up more. But tomorrow's CPI numbers, everyone's already warning you about how hot they're going to be, which is usually a bad sign. Let's see if they miss estimates tomorrow morning. We can actually have a big dump tomorrow. Here's XLF, the financial fund. We did get a nice bottoming candle. Great call by T. He called JPM calls. They went up over 100%, called the bottom. Is this the overall bottom for XLF? I have no idea. We're still underneath every single moving average. And XLF, just a 3-day bounce, and now we're turning back down with this kind of daily candle. Looks pretty bearish to me. Plus that DB news is a little bit bigger than you guys think. I mean, someone selling 116 million shares, even though they're getting dividend on the bank, should tell you exactly what you need to know about DB and the rest of the banks. So keep an eye on that one. I do think it'll dump farther. IWM, again, just kind of flat. Bounced big up, big down, big up, and then closed almost right where we opened. A little bit down overall on the day, which will make for an ugly candle, which is exactly what we got. So we're closing below last week Thursday's lows, which is awful. Very bearish chart, very red flag right here when we broke back into the base and declined. So IWM right now is in the doghouse. I will not touch it long, probably short it very soon. Here is the VIX hammer candle. So we had the hourly falling wedge that was pointed out at least 10 times in the group in MSL. Big rip out of there. I told you guys it's too hot on the hourly. It needs to cool off. It cooled off for a long time, guys. So it cooled off all the RSIs, everything, and then today we got that pop. Let's see if it continues tomorrow. It is forming a little head and shoulder, inverse head and shoulders here on the 4 hour. Remember that, guys? So be careful in longs. I mean, your shoulder, head, shoulder, and it looks like it's breaking out now. So let's see if VIX heads back up to the 40s. We will short up to the VIX 30s, 35s, and then we'll flip long at 40 again. So it's the same play over and over again. Just keep running it. It's a range-bound play. ES, the only reason I went long on Apple today was ES was holding that 50-day moving average. So ES has a 50-day moving average at 44.20, guys. That's why we were kind of stuck in the mud there in the middle of the afternoon, all afternoon, because of that 50-day moving average. People were trying to buy it up. I seen buyers step in there, jumped in some Apple calls. Then it broke the 50-day. I cut my Apple calls negative 8%, but that's what I'm doing in longs right now. If I do see a long, I'll take it, but I'll keep my stop loss very tight, and my position sizing won't be as big as normal. But right now we closed below the 50-day moving average. We're below the 200. We're below the 21. We're below the 8. We're below all the moving averages on ES. And right now it looks like we want to come back down. So last time we did go down, it reminds me of this day on February 11th, where we had one more down day after the cross of the 200 day. We had one more down day, then a couple day bounce, and then they really rolled it over. So that's what I'm expecting. Maybe the CPI number comes in line. Maybe they gap it up tomorrow, and then they start the real rundown later this week or next week. So let's see if we get that down move that we've been looking for. Apple, so we had the puts over the weekend. Why did I take puts over the weekend? Weak Fridays usually lead to weak Mondays. Markets don't usually bottom on Fridays. Told you guys this a bunch of times. Again, very strong resistance up here, especially with a 12-day straight run green. We're not going to break through a resistance this big. Rejected. Bounced a little bit to scare out these early shorts, and then the real move came down. Right now, Apple is below the 50-day moving average. If you guys look, every time we close below the 50-day moving average, like February 16th, we had 4 straight red days. Last time we closed right here, another 4 straight red days. And looks like Apple has a date with the 200-day moving average again. And I think it's inevitable at this point. It's around 157. So 157 would be the target if you're still short Apple. Other than that, I will be looking out to roll out my puts. I want a little bounce. Tomorrow, a bounce, like Ricky said, if we get a bounce tomorrow, it'll be very good short opportunity, in my opinion. OPEX might throw a wrench into that plan, but let's see what happens. Here's Disney. We hit the calls in the morning. We planned this out last night live on the charting session, guys. Said watch the Dow Jones stocks, especially with financials reporting this week. And you have Disney here. We had a low on January 24th, lower low on March 14th, and then we had a little higher low here on April 8th. But the thing about that is the RSI is actually moving in a bull momentum. Why? What does that mean? That means every time that they're selling it off, the RSI is staying higher and higher. That's changing the momentum in the favor of the bulls. So Disney, I will most likely be in calls again some point this week, just based on this daily bullish divergence. If we hold today's low, I might even jump in calls tomorrow. So let's see Disney. Focus on Dow Jones this week, guys. It's going to be big, especially with the financial earnings. Here's Twitter. I did follow that there's not much on the chart. Honestly, I didn't even look at the chart when I seen those huge flow orders for Twitter. Sometimes flow is just flow, but when you see like size, like the size I seen today in the 55s and the 50s for May, they're trying to gamma squeeze this or something. And OPEX coming on Thursday, I think it's a little too much of a coincidence for them to start buying Twitter today. So I jumped in some calls. Let's see what happens. It is a beautiful chart, I'm not going to lie. Huge gap up, came down. We did come back down into the gap, so there is a possibility the gap fill down to 39.85, but with the amount of volume and the flow that I seen in options, I think it's worth a shot. So I took a few there for May. DB, okay, so this is the thing. Me and Bookie have understood this. I know a couple people still haven't understood this. It's completely different being a bear to a bull. When you're a bull, you want to get in a position, you want it to be green right away. When you're a bear, sometimes you have to sit through some red, guys. We bought DB on April 7th, I believe, for about 50 cents. Friday, DB ripped. We took out the high of Thursday. Was I worried? No, we had May puts, right? So our puts went down a little bit on Friday, and then the real move came today. If you wait till the actual real move, sometimes you're going to be chasing those puts. Sometimes you're going to miss the play completely. So basically, if you're a bear, sometimes you have to sit through pain if you know what's coming. So DB, look at the day we had today. Negative 6.4% on a bank in one day is a big, big move. And right now for DB, my price target for my first sell would be around 1150, which would be a gap fill here. And the second target would be 1080. And honestly, with the type of news that we got today and that selling volume we got today, I wouldn't even be surprised if DB is in single digits by our expiry in May, guys. So keep an eye on that one. Veru finally played out. I called this play out last October. I told you guys exactly what was going to happen. Their COVID pill was going to get approval and they were going to stop a lot of deaths during COVID. Obviously, they took way longer to release the news than I thought they would. They released it today and the stock was up over 200% today. So those leaps went from 0.01. I have them in my account, so I know. Last Friday, they were 0.01. Today, they were going for $3. 30,000% gains, guys, in one day. After sitting in the same play for 5 freaking months and it's not doing anything, in one day, they gave us 30,000%. So congrats if you held. I know Oscar held. I know a couple other people held. And let's see what it comes tomorrow. I mean, that's big news. There's a lot of shorts stuck in this one, I'm guessing, because it's been going straight down ever since I bought, basically. Actually in March of 21, it's been straight down in the line. So everyone that has shorted since March of 2021, any short is underwater now. So they're going to have to start covering. They're going to get margin calls. And let's see if this one can actually squeeze into Thursday. There's a good possibility Vero squeezes into Thursday. Here is Tesla. I mean, beautiful play by Bucky. He held it over the weekend. One of the very few guys I know that can hold puts properly to get maximum profit. You have to hold through some pain sometimes. And look at this Tesla. Complete rejection from resistance, complete turnaround. Went over this on the charting session as well last night. And we ended with, this is like a dead man's emoji. Like, I don't even know what it's called. But it's, I think it's a graveyard, graveyard doji maybe? I don't know. But it just looks ugly. It's an inverse hammer, guys. Huge sell signal. If you're long in Tesla on this daily candle, I wish you good luck, and I hope you don't hope you don't have your whole account in it, because that's the one of the ugliest daily candles you can have. Inverse hammer. That means all the buyers, all the longs taking profits. That means all the shorts are stepping on the gas now. So right now for Tesla, the next stop is 921. You got 921. Then you got 885, guys. If you're short, I would look for 921 for some profits and then 885. Other than that, if you want to get long, I would not even touch it long until we get one of these supports and it holds. Mara is another one I took puts on today. I seen some very weird flow coming into Mara today. People were taking $18 puts even though the stock was at 22 bucks. Very ugly chart. Obviously, we are sitting at a support. The support's a little bit lower, which would put it around $20.60. If it breaks $20.60, straight shot to 1832. As you guys seen, the support has held 3 times now, and usually, not always, usually supports break on the 3rd or 4th try. So let's see if Bitcoin keeps up weakness. It's very clear head and shoulders here, guys. Like, I don't know how much more clear a head and shoulders gets, but if we do go and test these supports again, I think we're going to break it this time. UPST is one to watch out. Growth stocks overall had a pretty relative strength day. I mean, it's only down 1% when Apple is down 2.55%. So growth is a little bit relatively stronger than the big boys here. Keep an eye on UPST. There's a good support here around 100 bucks. I mean around $87, guys. Very clear. 1, 2, 3, 4, 5. So 5th time holding it. If it holds it, it could lead to a nice bounce. If it breaks it, it's going to flush really, really bad. Let's go over a couple of charts here. We got NVIDIA. Again, guys, semiconductors we went over yesterday. You're probably a free member, but we went over all of these in the newsletter. NVIDIA is a very, very clean chart in my opinion. You have a weekly 50-day moving average here at $231. We gap below and we close below. So if on Friday We closed Nvidia under 231. This thing's going all the way down. Most likely it's going under 200 bucks, guys. Most likely on Nvidia. If we close below the 50-day moving average this week. Why do I say that? Nvidia has not lost the 50-day moving average since COVID. Or not even during COVID, it didn't lose the 50-day weekly moving average. It lost it in 2018, guys, the last time the Fed hiked interest rates. So big move down on Nvidia is possible around 200 bucks. I would look for support, psychological. Other than that, if you're long, I don't know what to tell you. I tried to warn. Here is run inverse head and shoulders. We've talked about this already with RD. Daily's a little bit cleaner. It is an inverse head and shoulders. Very clear resistance here. 34.26-ish. Why did I write that? Yeah, above 34 would be my only long entry on run. Right now we close under the 50-day moving average. It is forming inverse head and shoulders, but how far does this shoulder go? Nobody knows. There's no support down here, really, until down here at around 18 bucks. So do you really want to hold it through $18? I don't think so. Other than that, if I was to get into this sector, I would only focus on ENPH. Much stronger chart, much stronger companies, much stronger earnings. So keep an eye on ENPH instead of run, in my opinion. Here is, I got you, Lords, I got you. Just give me 1 second. Here's pins here. We got the pins. Honestly, T would probably be a better chart, this one. I don't really see much on it right now, to be honest. Other than the Twitter hype that's holding it up, kind of. I don't really see any, oh, there is earnings coming soon, though. Oh, May 19th, never mind. So I don't really see much on the pins chart, to be honest. I want it back over 26 bucks to get interested on it again, but for me right now, this is just chop. We're sitting right at the bottom. There is a nice support here around 22 bucks. As long as it holds above 22 bucks, it does have a chance to go higher. If it breaks below 22, I think there's much lower coming for pins. It's not really a chart play, I don't think. I think it's more of a takeover play or a buyout play. UPST, we already did, Joseph. Again, not $87, strong support. If it holds, this has a good chance of bouncing. Again, UPST and growth names held up better than the big boys today, the big FANG names. So that one, I called it out in the group earlier as well. UPST, I like the the $100 calls for April 22nd for under $3. I think those can work. So I might jump in those as well if growth shows relative strength again tomorrow. I'm going to start looking out for those plays. But for right now, I don't want to be too long into anything. Here's Shopify. So all I have to say about Shopify is if you're long, if a stock announces a 10-to-1 split and the stock is only up 2% that day, that's awful. I know it's green, it looks good, you want to get excited for it. Oh, it's a stock split. But man, that kind of news 3 months ago, Shopify would have been up 10% on the day. It would have been up 100, 120 points. I like that play, Joseph. I like UPST long. I like how growth was strong today, even though the generals were dying. The generals meaning FANG. And Shopify, so longs, 10-to-1 split, and you're up $14 on the day after being down from 1,700. This split reeks of desperation to me. Why do I say that? Why would you split the stock at $600 when your stock was just $1,700? If they split it at $1,700, 10 is too many red flags, Turkey. I agree with you 100%. Every single bounce on the daily has not been able to get through the 50-day. Hell, even the bounces started getting under the 21-day. Finally, we got a bounce up to the 50-day reject, and now we're right back down here. I would not touch Shopify long with someone else's account, let alone my own money. I wouldn't touch it with someone else's money. If Shopify closes over 710 daily close, that's the only time I would even consider longing shop, 710. And as far as the short side goes, I'm not really interested in the short side in shop for the same reasons. That 10-to-1 split is too much of a unknown factor in my head. So if Shopify breaks below 585, you can short it and probably get all the way back down to 500. 585 would be my trigger. I already have my alert here. I'm not too excited to short it because of that split news, but At the same time, I would much rather go short shop than long shop right now. Other than that, I hope you guys had a great day. The market looks really, really weak. Let's see what the CPI comes tomorrow. The estimate is 8.4%. If it's anything higher than 8.4%, just get ready for a bloody Tuesday, guys. Other than that,